Join us for our weekly market wrap-up is Mark Wenzel from Hopkins Group. Good morning, Mark.
Morning, Michael. How are you?
Good, thanks. Now, I see some of the online retailers are struggling in the post-COVID world.
Yeah, that's right. They're certainly the return to physical retail stores is impacting a couple of the retailers that reported profits this week, including Temple and Webster. The online homewares store reported a 14% drop in sales compared to the same July to November period last year when we were in lockdown. The stock's down 56% in the last 12 months. Kogan, the online sort of technology retailer, reported a 38% drop in sales from July to October compared to the same time last year, with the stock trading around $3.60, which is double the initial listing price of $1.80 in 2016, but a long way from the peak of $25 in October 2020 during the peak of the lockdown sales. These two companies highlight the importance of not getting caught up in the market noise at any point in time. Both Temple and Webster and Kogan have produced solid returns for investors as more people are buying goods online. But it's important not to get carried away during periods like the COVID lockdowns, where the positives and the negatives and the view of the investment returns, taking a broader lens to assess the performance over time.
Now, iron ore, that's jumped up a bit.
Yeah, iron ore's back above the $100 level mark, which is great news for iron ore miners, obviously, but also great news for all Australians. We've highlighted in the past the importance of iron ore to the federal government's company tax revenue, where iron ore broadly amongst the major producers represents about 30% of all corporate tax. And so obviously when the iron ore price goes up, more taxes for the government, which is fantastic, that gets put back into the Australia. Plus, obviously on top of this, the major producers, BHP, Rio, Fortescue, are all in people's superannuation portfolios. So as obviously prices rise, more profits are generated for superannuation shareholders. And it's just sort of reinforces also the other message that we've been delivering to listeners and viewers over the recent times, is that while things are obviously being portrayed as bad news in the media, there's a lot of real positives in the economy. And you're seeing some of those signs that we might be able to ride through the high inflation period and emerge stronger in the next phase of growth.
And finally, some good news for Qantas.
Qantas, yeah, absolutely. Qantas has increased its profit again. So at the start of the financial year, they were sort of forecasting a $600 million profit. They raised that from 600 to 1.2 billion, and subsequently last week raised it to between 1.35 and 1.45 billion. And this is before the busy Christmas flying season that you obviously expect coming up. The profit is stunning for shareholders, but is really difficult for a flying public who feel they've been taken advantage of. The lowest airfares today are as high as they've been since 2007. So obviously a long time, and Qantas say demand for domestic travel is particularly high, that supply cannot keep up. Obviously, Virgin's not as strong as it was, and obviously Qantas don't have as many planes and many people to support the flights. So that's why it's saying it can justify the price that it's charging. But, it could come back and bite Qantas if customers feel like the national airline is profiting at their expense. Once competition returns, particularly in international travel, Qantas' loyal customer base could look elsewhere in protest of the price gouging the airline is undertaking. For Qantas shareholders, you can expect higher dividends for the next year, and obviously potentially further buybacks, with its current debt level sort of $900 million less than what they'd forecast at the start of the financial year. Again, as we sort of talked about with the retailers, with the online retailers, I mean, again, with things going so well, it could be a good time to consider the true long-term returns from airlines, which are usually poor and difficult businesses to return to profit. So again, if you own a Qantas, just to have a consideration about whether now is the right time to consider selling them, I suppose, and just sort of consider, what the long-term valuation of the airline is, particularly once competition returns, and the valuation-wise, in a difficult business environment.
getting the management down there loading the bags has obviously helped.
Well, maybe they can have a better understanding about what is involved. But just before we do go, and it's not sort of mentioned there, but last night the US Federal Reserve Chairman Powell highlighted that they may be coming to slow down on the interest rate rises in the US, and that sort of markets shot up, but last night. But again, I think it's sort of, again, as we've been talking about, perhaps that inflation's starting to peak. You know, the interest rate rises that they've put in so far, both in Australia and in the US particularly, are starting to slow the economy to such an extent that the need for further interest rate rises is starting to diminish, and hopefully over time that you're going to have a reduction, you know, in interest rates, I guess, to support the economy. So there's potentially some good news on the horizon for early next year.
And we saw interest rates come back a little bit here in Australia. Dare to make a prediction for next month's RBA meeting?
Yeah, so the inflation rate did come back a little bit. So I certainly think that it's going to be a sort of 25 basis point increase again, you know, this time around. But I sort of expect a pause. They don't meet in January, and then so I would expect a pause in February and March just to see how the interest rate rises that they've made so far come through, and also just to get a feeling for how much inflation is coming through with the Christmas period. So I think they'll probably pause for the first quarter of 2023 and then determine their next course of action after that.
Unless both of the people who voted for me go out on a spending spree and boost up the money in the economy and whack inflation back up. So, well, Mark Wenzel, Hopkins Group, thanks so much for your time, and we'll speak next week.
Thanks, Michael.